Welcome to Wealth Made Simple with Shaz, where you'll learn how to master your money through business, property, and tax-saving strategies. Your host has collectively helped his clients make tens of millions of pounds in additional profits through these strategic approaches to business. Introducing Shaz Nawaz, an award-winning chartered accountant, property tax expert, entrepreneur, and property investor.
Let's look at smart first. Who asked the question about smart? Okay. Do you want to share with everybody in the room? Does everybody know what a smart company is, by the way? No. No? Okay. The floor is yours. What's a smart company? Oh, you don't know? Okay. So apart from you, somebody else mentioned smart too, though. Sumedha. Smart company. Spill the beans.
So where you have a holding company and then you have the investment there. So just to explain that you have the PropCo and then the investment company.
What's a PropCo? Sorry?
Property holding company.
So we've got a company over here, and then we got a company beneath. Over here, and this is called. No, you use the word. This is PropCo, yeah. Okay, and this is OpCo then, yep. So OpCo, PropCo means operating and property. Yep, go for it. We've got 9 minutes, so I've got to cover this and LLP hybrids. So we've got full 4 minutes together. So
the investment holding company, and then you have beneath that you have properties. You could have the trading company, holding company structure, and you could have the investment trading structure. So holding company, and then the couple of SPVs where you hold your properties.
Yep.
So that's your investment trading structure. And then you have another one, holding company, and you have HMOs, SA, or whichever strategy you're working on, you're into SA, and you have those SPVs sitting under that holding company.
Does anybody follow that by any chance? Because I didn't. He's talking about me, by the way, but not you. Very simply speaking, smart is a term used by a particular firm, okay? It's just a company, okay, with some other companies. So simply speaking, you have a company, as Sumedha said, yeah, we'll call it 𝐡𝐞 holding company. And then what you may have other companies and you may not. But very simply speaking, what you do is, on top of this, you form a trust, okay? And some of the shares go to a trust. Again, without complicating it, why would somebody want to form a trust with their company and give some of the shares to a trust? Inheritance tax, okay? So it limits that exposure, okay, over here. Then what they do is over here, you can have different classes of shares. Why do you want different classes of shares? Anybody?
More flexibility with what you do with it.
More flexibility in terms of?
Income.
So flexibility in terms of income. Also, what other flexibility do we have? Which is income as well, by the way, but yeah, okay, anything else? What other right does owning shares? Sorry? Voting rights, okay, you got voting. Anything else? Sorry? So, yep. Capital, yeah. Yeah, which we'll call income, okay? So, what you basically do with what's termed a smart company is you have a trust on top, okay, to limit your exposure that you have at the moment in your company. Or if it's a new company, you obviously don't create any exposure. Then you have different classes of shares, giving different people the rights to income or rights to capital. On top of that, what you do is you freeze the value, and we've kind of covered this a little bit previously, Faris. You freeze the value of the existing shares. So let's say Faris has 3 companies and they're worth 100 grand each, and Faris says, I'm concerned about inheritance tax. We set this kind of structure up to help mitigate the 100 grand exposure he has. He then creates a new class of shares and gives those to his children. he freezes the value of his current shares, says the 100 grand value stays with the ordinary shares, which are his shares, which we're going to move over into the trust at some point. All future growth goes to his children. Now, Faris is quite concerned, okay, or not Faris, but somebody in Faris's situation may be concerned. But if I'm giving all the capital to my children, bless you, okay, after year 5, 10, 15, they'll have quite a bit of capital. What might be a concern, do you think, for Faris if all the capital for future goes to his children? What's a concern for him personally? What may be a concern for him personally?
Control.
Sorry?
Control.
Control, yeah. Because if he gives his children most of the capital, they might...
Stick me a care home and spread this.
You'll be lucky to do that, by the way. Okay? You don't see some of the documentaries I've seen. What Faris does is, he can give them rights to capital, but don't give them any voting rights. Okay? Which means they can't decide what happens and how it happens. Okay? What Faris can also do is limit the amount of income they get. Okay? What he can do further is, he can limit how much income they get, if any, if the company's wound up. Okay? Rights on winding up, yeah? So you create different classes of shares, give different shares to different people if you want to, by the way, and limit their control, influence, power, authority, call it what you like, okay? But give them the right to capital, but you control everything, so they've got minimal control. Does that make sense? That Sumedha, in a nutshell, is a smart company, in a nutshell. Okay? Yes, sir. We've got 25 seconds to answer your question and that one there, by the way. Keep it very short, Robert.
Trust on top of a holding company at any time.
You can, yes. There and then there.
When you've got a holding company structure, does all the different property, all the different businesses underneath need to be relatable? So, you know, if it's a property business one, property, trading, whatever, can it be other companies?
It can, but when you've got this particular situation, I think somebody mentioned it, I think it might be you, Sumedha, you don't want to mix trading and investment here. Because remember, if 20% or more of your turnover, income, profits, value or gross value of assets or time spent is investment, you lose trading status. Okay? Investment companies have very little tax reliefs and allowances, okay, and exemptions. Trading has pretty much all of them as long as you qualify. So somebody else, I think, asked about SA HMOs. Don't mix SA and HMOs, keep them separate. Because SAs could be classed as, SA can get the same benefits as a trading business. And somebody said SA is trading. SA is not trading, but it gets the same benefits, okay, as long as you meet the rules and the threshold, unless you've got service departments. HMOs, okay, you don't get any additional reliefs, and Section 24 affects you as well. So, okay, that question answered. Now we've got 90 seconds to answer the LLP hybrid. Whose question was that? Sumedha. So, has anybody come across LLP hybrid, by the way? Okay, so very simply what happens is, okay, you have an LLP, you can have an LLP, which is a limited liability partnership. How many entities do we need to form an LLP? 2, okay? Partnership means 2, okay? And what generally happens is you have an individual over here, and you have a company, and both of those own part of the LLP. And in a nutshell, what happens is sometimes assets are transferred over, and then sometimes income's passed over, okay? To keep it really, really simple, because I've only got 50 seconds, is this structure set up to partly try and avoid Section 24 for interest. It's partly set up to pass over value to your loved ones, okay? In an LLP, because you can have different members, i.e. partners, and you can give them rights to capital, or you can give them rights to income in a different way to companies. But Sumedha is a complicated structure, okay? Costs a lot of money to set up, and isn't always fit for purpose. It does work, but it might not be fit for purpose. If I were you, rather than looking at that, I'd look at that. Yeah? That works so much better, and is fraught with less problems, because that's got too many moving parts. And it's officially called a mixed partnership. So if anybody's interested, just Google mixed partnership and all of that stuff's gonna come up.